In this video, traders, we are going to look at 5 common behavior patterns that are sabotaging your trading. Stay tuned. Hey guys, very warm welcome to you. Thank you so much for joining me. If you've clicked on this video, you're probably relatively experienced in trading, and you may well be thinking, hey, you know what, my setups are working, my strategies are working. I feel like I have what I need, but I'm just spinning my wheels. I make 4 steps forward and I take 5 back, or I make 20 steps forward and I make 22 steps back. So you're making that forward progress, but you're undoing it. And listen guys, this is normal. This is the normal process. You know, there's so many things that you need to adjust and tweak and stuff, but in this video, I'm gonna keep it short and sweet. I'm gonna talk about 5 of the main things, and we'll briefly touch on maybe how we can fix them, but make sure to subscribe because we go into the depth a lot more about each of the individual one of these in the future if there hasn't already been a video out there. But you know, there's some things that are recurring time and time again, probably in your trading, and again for many traders out there. And all of these, I will openly say, as I always do guys, I've been in all of these boats, and so this is why I stand up here and kind of share my experiences with you, and hopefully you can take away 1 or 2 things. Never expect you to listen to it all and go, yeah, it's great, but if you do, that's great, but 1 or 2 things enough just to kind of move you forward a little bit, and then that's 5 or 10 minutes well spent, isn't it? Right, okay, so number 1, guys, putting too much emphasis on one trade outcome. Literally, there's a video that I've just done about this, a bit more length, so make sure you subscribe because that's probably coming up pretty soon. But the emphasis on one trade outcome is a classical error that we all make as traders at one point or time, at one time or another, should I say, in our career. Because we want that trade to be a winner. Well, if that's a winner, that's great. That's going to put the account up to this level, blah, 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 blah. It's going to get our money back. And that's a really bad way of anchoring our thoughts. Because when we're anchoring it on the outcome of something that's relatively random, guys, okay, it's random, but there's an element of luck involved in it. It's like there is perhaps with poker. You know, there's an element of luck involved. You know, we don't know what's going to happen. We don't know with certainty what's going to happen. There's always an element of chance to the trades, and we need to accept that. And again, more depth of that in another video. But when we really anchor our value as a trader to the outcome of the next trade, we set ourselves up for failure, because we can never ever know what's going to happen. Even if we have winners, at some point we will have losers, and that'll be even more damaging. So try not to put too much emphasis on one trade outcome. And in fact, in a minute, the famous psychologists have talked about this, Mark Douglas, especially in his book Trading the Zone. You know, the sample size has to be large enough. We can't put the emphasis on one trade, and that's a big trap, behavior pattern that we fall into. Number 2, guys, is thinking in terms of P&L. So having your P&L on a window while you're in a trade. If you're a day trader, no, get rid of that. Looking overly at your P&L, and unfortunately a lot of the platforms are packaged so that, you know, you see your positions and then you see your P&L and you see your account balance all in one. In reality, you know, in fact you can take one step further, and sometimes you can extract stuff into Excel or just in the States. There's ways to get around it, but anyway, but that's by the by. The thing is, guys, I want to really avoid P&L. It's process, it's managing the trade, it's the risk-reward ratio. The P&L's irrelevant. I know it is relevant, and I'm not saying that it's not important, because of course it is, but if we're judging, we're looking at the scoreboard all the time, so to speak, then we're never really going to be looking at the process of improvement and analysing the chart. Example could be, you're up massively on your trade. You look at the chart, and really, if you weren't looking at your P&L and thinking, hey, I'm up a substantial amount of money, you'd probably hold the position. You'd probably be like, hey, it's going to pull back a little bit, one more backfill, and then one more explosion amount, and that might be double what you've made. But the fact that you see all that money there, and then you see it pulling back maybe a couple of days if you're a swing trader, or a couple of hours if you're a day trader, you just start to get twitchy because you start to think the money's going to disappear, and you close it, and it's the worst time to close, so you never get a chance to get a real home run. And flip on its head, guys, with the losing. You might set the loser and be like a deer in headlights, whereas in reality, if you saw it just blatantly, just clearly without P&L, and you just cut it and get rid of it. So just watch out for P&L, how that influences your decision. Watch out for the behavior pattern around that. And number 3, guys, allowing emotion to overrule process. Now, I'm cautious about this emotion bandwagon to jump on, because Denise Shull says it perfectly in her book Market Mind Games, is that, you know, you need emotion, and we can leverage on emotion, and using it as a tool to make better decisions is the correct way. However, I will say that I think that many traders allow too much emotion to cloud their decision. So if you are trading from a place of fear, then you are going to be trading really not in a correct manner, because you'll be trading fright. If you're trading from a place of anger, or trading from a place of frustration where that emotion is the primary driver of your decisions, then I think it goes without saying that then has a negative impact on your trading. You know, what Denise Schultz says is that, hey, some emotion is good. If you're not feeling good about a trade, maybe you should listen to it. How to kind of push intuition more into your decision-making process, well, that's a whole other topic in itself. However, sticking with the brief overview here, guys, allowing emotion to over process. If you're trading from a place of fear, trading from a place of frustration, trading from a place of anger, annoy, any of those things, and you're just angry at yourself or the market, then you're just never ever going to trade with clarity. And there's nothing wrong with having those emotions. They're going to happen, but it's knowing when to let them calm down, recenter yourself, and then go back to the markets with a fresh mind and a fresh decision-making process. So watch out for allowing emotion to overrule the process as a negative behavior pattern. All right, number 4, guys, not reducing size after a losing streak. Commonly with traders, we will increase size. Or traders who, should I say, are going through their learning process. And guys, you know, I've done this many times before. I've been in the stages in early days where I've just added to trades. I've increased my position size after losing streaks, so wanted to get it back so bad, and it never ends up. It never ends up well, does it? It never does. You know, when you're in losing streaks, the hardest thing to do to kind of reduce the size, but it's the best thing to do. And I'm telling you guys, if you can do that, that's a big thing in its own. Like, hey, losing streak, back off the throttle, small size. In fact, there's probably a video that's just come up, if not on its way up now, where I've talked about my current, this month, as I'm filming this, the latter end of the month wasn't a good month for me, and the process that I will be going through to make sure that May's a better month and we get it back and we're all back to where we were, rather than really focused on, oh, I've got to get it back, I've got to do this, got to do the other, the process focus. And one of the things talked about is reducing size, going back to basics, making sure the process is right, making sure the things been here many times before, will be here many times again, but it's making sure that you react in the right manner. And reducing size after a losing streak is one of the better things to do, habits to do, rather than increasing it. Final thing, guys, going on tilt. This is a summary of all this, or a combination, should I say, of all of this. And going on tilt is trading from revenge, trading with more size, trading without a process, trading just focusing on P&L because you want the money back, and just trading out of emotional anger. So you're just putting massive amounts of money on trades because you want to get it back. You'll just focus on getting it back. You're angry. You're trading from a perspective of you're all, holding yourself tense. You're trading way too much size. That's affecting your stress levels. The fact that you've probably drawn down before, that is affecting your stress levels. You're picking trades you don't really want to take. That's affecting your stress levels. And it's just a bad way of trading. The ultimate inevitability with that is always that you will blow up. Not necessarily the first time you go on tilt, because you might get away with it a few times. Because like we know, guys, there's an element of luck in trading. You might go on tilt and trade massive size, massive this, massive that, get away with it, but the one time you don't will be the time that it undoes all the good work, and that's how account blowups happen. So as a final one, guys, is the common behavior pattern that many traders do. And so, and again, there's more depth of this in other videos and other videos coming up, but going on tilt itself is something to be avoided, and we look at how we can identify different things physically that seem that we're going on tilt, different things in our trading that see that we could go on tilt. So we try to preempt it by saying, hey, often maybe if I have a string of losers, that causes me to trade a little bit more from an anger perspective. That is a tilt warning. Or, hey, I've just been stopped out of 2 trades in a row, or whatever it may be for you. Something will cause a trigger. Maybe you're sitting a little bit more, hunched in your chair. Maybe you looked a little bit closer. Maybe there's all these things that we talk about. But the point is, guys, is stopping it before it happens. Because we're all human. We'll get angry at stuff. We'll get frustrated at stuff. We'll enjoy it. This is the way it is. But when we can recognize these things and prevent them from doing catastrophic damage before we reset, then we're okay, we're all good. So anyway, guys, there's 5 common behavior patterns that sabotage your trading. Let me know which ones applies to you in the comment section below. If you've got another one that I haven't included, because there are others, again, add them to the comment section below. Maybe we'll do another video going into a bit more depth about that. Hopefully, 1 or 2 things you can take away and improve your trading with. Take care, guys. Keep your risk managed. Don't forget to check out our channel sponsors. A link to them in the description below. Thank you. Bye-bye.